Good morning, traders and investors. Today's Friday. It's March 17th. Thank God it's Friday. I have no idea where this week has gone. I remember driving from South Florida Monday, and then the rest of the week is a blur. But it is Friday. It's about 7:51. The market's going to gear up to open in about an hour and 39 minutes. Again, I want to thank every one of you for watching this video. Please subscribe to our Telegram channel. We give free trades there sometimes. It's awesome. The link is below this video in the YouTube Wealth Press channel, and make sure to comment below this video. Look, the good, the bad, the ugly, I don't care. I'll take it all. I have a pretty thick skin, or at least I used to have. But seriously, folks, let's talk a little bit about what we can expect today. And I want to show you what algos have been doing for the last 3 sessions, which is really interesting. So I'll start with that. First of all, this is a S&P intraday chart. I hardly ever use intraday charts, but I want to show you guys something. So this is really interesting, okay? The last 3 trading sessions, right? The market's been cooling off, and then algos have been taking it. This is a 30-minute bar, okay? So look at what happened at the end of the day on the 14th. Look at what happened at the end of the day on the 15th, right here, right? Near the high. Goes down here, takes us down, and then comes back up and closes near the high. Look at what happened yesterday. My point is, every day for the last 3 sessions, the algos have been waiting till the last half, except for yesterday. Yesterday was a really pretty strong day. But if you look at the day before, if you look at Wednesday, and if you look at Thursday, there's a clear conscious effort to drive the market higher towards the end of the day and open it slightly lower. And I believe algos have been doing that to confuse market participants into thinking that the market is really gearing up to go much higher, where in reality, I think the market is going to remain choppy. But I wanted to show you this, how concentrated. Look at this. The market comes off, full day right here, right? All the way till the end of the day. And then look at the last 30 minutes of the day. Same thing on Thursday. Not really anything major. And then as the day progresses, it starts going up. And then look at the last bar, right? And then yesterday starts kind of flat and then takes off. But what I'm thinking is the algos are doing this to bid up certain stocks so they can snap them and they could sell them later on. So we got to be really careful today, because we've seen this kind of a route now for 3 days, and Tuesday, Wednesday, and Thursday. So I'm curious if they're going to continue doing that today, or if today they're going to take the market down, because we are opening quite a bit lower right now. Not too much, but we are opening lower. But it'll be interesting to see if the algos do the same thing today. If they start the market lower and then close it up, run it up literally at the end of the day, or if they start the market a little softer and continue the route. There's no real major negative data today. The banks have been shored up, and I'll talk about that in a minute. We don't have huge reports today. I mean, we had CPI, we had PPI. But what's interesting, the market didn't rally in any of those reports. It rallied towards the end of the day, all 3 days. Look at yesterday, look at the day before, and then look at Wednesday. It's very obvious, and it's actually been very dramatic. Matt and I, my assistant, we were actually talking about it yesterday, how these things are happening. So keep your eye out, especially for the last 45 minutes, the last hour of the day, because the algos have in fact been manipulating this market higher and really putting in the buy stops towards the end of the day. Now, it could be that they just want to wait till the end of the day to buy some bargains, probably in financial stocks, which makes sense. But be cautious, because it looks like we could be topping out around these parts. So we got to be really careful. And if you see the market running up the last 45 minutes to an hour, don't be surprised. Those are algo plays. Typically, Friday, seasonality-wise, Friday is not a really strong day for the market. Friday and Monday morning, Friday whole day and Monday morning are typically not great days for the market. Then the rallies start up again Monday afternoon and goes towards Wednesday. That's not always, that's just a seasonality factor, and we got to be mindful of that. But that's what the algos have been doing to us the last 3 days, the last 3 sessions. So be careful. Let's see if this pattern continues. Now, as far as data, as far as Fed data, we got industrial production today. The consensus is 0.4, but look at the range. The range is from negative 0.2. I mean, you got to have algebra for this. -2 to +8. I mean, that's a 10-point spread. They're looking for the consensus to be right in the middle. I'm more looking for the manufacturing output, which is -2, and the expectation is -3 to +3. So when you see expectations this wide, it's kind of discouraging, because it also tells us they don't really know what to expect. Looking at the bond market, I think the bond market has peaked out in the short term. I'm not seeing any major surprises. I think the bonds are going to stay stable because the banking sector seems to be stabilized. I mean, it's St. Patrick's Day, and I'm wearing green. Yes, I have green somewhere here, but I don't think the bond market's going to go higher, which will also put pressure on technology stocks, which have been totally running away because of this, because the bonds have been looser, and looser bonds, lower rates, really good for technology. So technology has been running away really, really well last few days. Tech is like the strongest sector right now, but be careful. I don't think this rally is going to sustain, and this is panic because of the banks, and I think bonds are going to go lower, which will put pressure on technology stocks, but at the same time, basic materials, consumer staples, energy stocks could be seeing upside. Matter of fact, let's see how energy sector is doing pre-opening. Oh, energy sector is actually a little higher today, which is a good thing. So yeah, I think energies are going to start coming up. I think consumer staples are going to start coming up. Matter of fact, let me show you my sectors. These are all the sectors. So be cautious. Be cautious. Look at technology. It looks like we're coming back to the previous high. And I'm telling you right now, there's just not a lot of juice in this, okay? Unless we hear some further news. Communication services, I don't think communication services is going to continue going much higher at this stage in the game. I think interest rates are going to start reverting lower because I think the bank fiasco is pretty much done. Industrial stocks, well, industrial stocks are looking pretty good. Consumer staples, I'm loving right now. Because they're tight and they're moving higher very slowly. Utilities I like. Do you remember last week I was telling you consumer staples and utilities are looking really good? Basic materials I think is going to run up. Consumer staples, don't hold your breath. I think it's going to be in this channel right here. And I think this communication and technology are going to peak out in the next 2 days, especially if the bond market goes lower, not higher. Healthcare looks like it's stabilizing. Let's see here. Energy is definitely stabilizing, no question about that. Financial, I think, is going to stabilize over the next few days, and real estate is not looking all that bad. I'm very nervous about technology because look at this range. And if you look at technology, oops, that's consumer discretionary. If you look at technology, you will see, that we're in this range. This is what I wanted to show you. That's kind of what I just wanted to draw that line further and just show you how I don't know if we're going to bounce from here or if we're going to break. If we're going to break above here, that's going to be great. But I don't think that's going to happen with the bond market. With the bond market staying here. And again, I don't think the bond market's going to go higher because I think we're done with the relief from the banking sector. I think that's kind of done already. Let's talk about news. There's a lot of news to digest today. Want to give you the full gamut. 3 benchmarks indices rallied as 11 of the nation's biggest banks injected $30 billion in deposits into First Republic Bank in an attempt to bolster confidence in the banking system. And I'm going to say they were pretty effective in doing that because the market rallied pretty hard. Technology, consumer services, and financial services rallied, but actually most sectors rallied into the close yesterday, the day before, and on Wednesday. Maybe not financials, but anyway. Tech-heavy Nasdaq, best single-day performance since early February. Again, NVIDIA got upgraded and interest rates are lower. Bond yield is lower, folks. That's why. U.S. regional bank stocks staged a strong rebound on Thursday with First Republic jumping about 10% after a group of big banks, including Goldman, Morgan, JP Morgan and Chase, Citigroup, and others agreed to deposit $30 billion into the troubled bank. Federal regulators and Treasury Department Thursday welcomed the decision by 11 larger banks and said it showed the resilience of the U.S. banking system. However, First Republic shares dropped over 11% in pre-market on Friday after they suspended their dividends. They just can't get it together. Treasury Secretary, Yellen is coming out, and she's saying banking system remains sound and America can feel confident about their deposits. I wonder if she was forced to say that or not. But honestly, I'm not, all jokes aside, I think that she's being honest, actually. The Labor Department reported on Thursday that unemployment fell 20,000 back into its range like I told you it would. There's no weird stuff going on there. U.S. housing starts rose to a 5-month high. Very, very, very surprised. Very surprised. U.S. building permits rose to a 5-month high. And Philadelphia Manufacturing Index, a key measure of manufacturing activity, improved marginally to 23.2 in March, but well below expectations of 15.6. Meanwhile, and this is what you need to focus on, U.S. rate futures have priced in an 81.9% chance of a 0.25 base point rate increase, and only 18% that they're not going to do anything. Look, unless something drastic happens, they're going to go 0.25. Europe just went 0.50 yesterday or the day before, and U.S. is going to go 0.25. If you guys don't want to accept it, I'm sorry, but that is going to happen. We're going to go higher because every Fed said it would. I'm only going with what every Fed said will happen, and it is priced in with an 81.9% chance. All eyes are on the U.S. Michigan Consumer Sentiment Index. It's coming out after the market opens. Actually, we have two reports. We have industrial production and consumer sentiment, and those are coming out after, well, industrial production not after the market opens, but consumer sentiment after the market opens. But honestly, after the CPI, after retail sales, and after the fiasco we all went through today, I don't think it's going to be that meaningful. European central banks raised its key interest rates by 50 basis points on Thursday, despite talk of a smaller increase. Yeah, if Europe went 0.50, U.S. is going to go 0.25. Eurozone February core CPI was 5.6, in line with expectations. That's very, very positive. China closed higher. That's right, not lower, as economic conditions are rebounding. New home prices in 70 Chinese cities rose, not went down, rose. The fastest pace since July 21st. This is very, very good. And Morgan Stanley said that they believe China recovery is on track, which is great. Now, Japan, they closed higher today but ended the week lower as major financial stocks were sold off because of the banking crisis. I guess Japan ate it too. Now, we've had some really positive news on a couple of stocks. FedEx, 11% in pre-market. They did really well with their earnings. United Parcel rallied because shipping now is a lot more because COVID is now behind us. NVIDIA, one of the reasons why chip stocks rallied yesterday. Now, I wanted to buy the stock for you guys, and the only reason why I didn't put it in my service, I put ADI instead, was because the options were too expensive, so I went with ADI. Should have went with NVIDIA. Would have been a better trade. And it was a seasonality too. I should have done it, but hindsight is 2020. I remember looking at the options, and Matt and I were like, it's just too expensive. So that's what I believe is going to happen. Keep your eye on the market today, especially towards the end of the session. In terms of stocks to watch, let me show you what's leading right now. These are stocks making 24-week highs. Tech stocks, Apple, NVIDIA, Microsoft. Be very, very cautious. GE, we took a profit on that yesterday. Salesforce, Meta, XM, Anet, ASO, ATVI, AGL, Agilon Health, CERT. Let's see if there's other big names here. CDNS, I've been talking this stock up for the last few weeks. GFL Environment, that looks pretty good. Just trying to see if there's any stocks here that are looking great. Lattice Semiconductor is still trending like it's been for the last 3 weeks. Spotify is trending nicely. I like it right now. NEO's trading, NEO, N-E-O, not N-I-O, is trending nicely. Not every stock. Hershey's is still trending. I recommended this stock to you about 3-4 days ago, and it broke out and it's continuing moving higher. Don't say I didn't say so, because I did. It was either Monday or Tuesday. And West Pharmaceuticals is looking beautiful. So there's a lot of stocks that are trending right now that we're going to be looking at, and I'll be adding to my hit list. Now, before I let you go to enjoy this wonderful weekend, we're fast approaching a major event called Market Redirect. It has nothing to do with earnings, an indicator, or even index rebalancing. It's much bigger than that. According to Lance Ippolito, he's a heavyweight, upwards of $4 trillion will be redirected late Friday afternoon, giving today the potential to be the best trading day of the year. That's why Lance is going live at 1:30 Eastern Time to share all the details, including how he plans to leverage the event. It's happening at 1:30 p.m., not 1:30 Eastern Time on Friday, March 17th, and I think it's St. Patrick's Day, which is why I'm protecting myself with green. Sign up below to watch Lance's event, 1:30 p.m. Eastern Time on a Friday, right? What else you got to do on a Friday? And remember something very, very important. Follow the link, subscribe to our YouTube channel. If you're watching this on the Wealth Press YouTube channel, feel free to post comments and feedback, and I will respond. I love watching you guys become better at traders and make money. Send me some feedback on your trade results. Support@marketgeeks.com. Talk to you guys soon. Have a great weekend. Ciao. Bye.